In the quiet heartland of America, an investment legend built an empire that defies the volatile currents of global markets. Warren Buffett, known as the Oracle of Omaha, transformed a modest start into a colossal fortune exceeding $100 billion. His journey isn't just a tale of immense wealth, but a powerful testament to the potential within each of us to cultivate vision, discipline, and unwavering conviction. We explore the remarkable story of how one man, beginning with just $100, masterfully constructed a legacy that inspires generations, proving that true success is built brick by patient brick. Born in Omaha, Nebraska, in 1930, Warren Buffett's entrepreneurial spirit ignited long before he ever heard of Wall Street. From the tender age of 6, young Warren was already a budding capitalist, selling chewing gum, Coca-Cola bottles, and magazines door to door. This early immersion in commerce wasn't just about earning pocket money, it was a hands-on education in supply and demand, customer service, and the power of a good product. It shows us that the seeds of future greatness are often planted in the simple, everyday ventures of our youth, shaping a trajectory toward extraordinary achievement. Warren's ambition quickly grew beyond small-time sales. At age 13, he took on a demanding paper route, delivering the Washington Post, honing his work ethic and discipline. This early grind wasn't without its financial savvy. By 14, he filed his very first tax return, ingeniously claiming a $35 deduction for his bicycle and watch, tools of his trade. This meticulous attention to detail and early understanding of financial mechanics reveals an innate talent for business that would define his future. Every step, even the smallest, built foundational knowledge for the colossal journey ahead. His teenage years saw an escalation in his entrepreneurial pursuits, transforming into genuine investments. At 15, Warren invested $1,200, a significant sum for the era, into a friend's pinball machine business. These machines, placed in local barbershops, generated income that taught him about passive revenue streams. Concurrently, he purchased 40 acres of farmland, leasing it to a farmer, an asset that paid for his college education. These shrewd moves at such a young age underscore a profound grasp of capital allocation and income generation, paving the way for his future financial mastery. Warren Buffett's formal education began at the University of Nebraska, but his thirst for deeper knowledge led him to apply to Harvard Business School. Upon rejection, he instead sought out Columbia Business School, a decision that would prove serendipitous. His true aim was to study under the legendary Benjamin Graham, author of The Intelligent Investor and the father of value investing. This pivotal choice highlights Buffett's dedication to learning from the best, demonstrating that sometimes, an unexpected path leads to the most profound and transformative opportunities for growth and success. Studying under Benjamin Graham at Columbia was a revelation. Graham's philosophy, detailed in his seminal work The Intelligent Investor, became the bedrock of Buffett's investment approach. Graham taught the concept of value investing, buying stocks for less than their intrinsic value, like buying a dollar for 50 cents. He emphasized the margin of safety, providing a cushion against potential errors or market downturns. These principles weren't just theories, they were a profound framework for rational decision-making, equipping Buffett with the tools to navigate market irrationality and build enduring wealth. After working for Graham Newman Corporation, Warren Buffett returned to Omaha in 1956 to start his own investment vehicle, Buffett Partnership Limited. With just 7 initial partners and $100 of his own money, alongside $105,000 from others, he began applying Graham's value investing principles with rigorous discipline. This venture marked a crucial turning point, moving from theoretical understanding to practical application. It underscores the power of taking decisive action on one's convictions, even when starting small, to lay the groundwork for a future of monumental success and influence. The Buffett partnership quickly achieved extraordinary results, a testament to the power of value investing. For 13 years, from 1956 to 1969, Buffett consistently outperformed the Dow Jones Industrial Average, generating an astounding 29.2% annual return compared to the Dow's 7.4%. This sustained outperformance wasn't about flashy bets or market timing, it was the direct outcome of meticulous research, patience, and a deep understanding of intrinsic value. His early success demonstrated that a disciplined, long-term approach could yield results far beyond conventional wisdom, setting the stage for even greater achievements. In 1965, Buffett made a pivotal decision, acquiring control of Berkshire Hathaway, then a struggling New England textile manufacturer. Initially, it was a classic cigar but investment, buying a cheap, declining business for its remaining assets. However, Buffett soon realized the textile industry was a losing game. Instead of letting it die, he began transforming Berkshire into a holding company, using its cash flow to acquire more promising businesses, primarily in insurance. This strategic pivot illustrates his adaptability and foresight, recognizing when to change course and redefine an entity's purpose for ultimate success. Under Buffett's leadership, Berkshire Hathaway evolved from a failing textile mill into a diverse conglomerate, a true testament to his vision. He used the profits from early investments to buy entire businesses, focusing on those with strong competitive advantages and predictable earnings. This strategic accumulation laid the foundation for the sprawling empire we know today. It shows us that true wealth isn't just about buying stocks, it's about acquiring and building enduring businesses, fostering growth, and continually reinvesting in the future, creating a powerful compounding effect over decades. One of Buffett's most famous and prescient investments was in Geico, the auto insurance giant. He first discovered Geico in 1951, long before acquiring it entirely. Recognizing its direct-to-consumer model as a sustainable competitive advantage, he began investing. By 1976, Berkshire Hathaway owned a significant stake, eventually taking full ownership. This move underscores his patience and conviction in businesses he understood deeply. It teaches us the immense value of identifying enduring competitive advantages and holding onto quality assets for the very long term, allowing their value to compound exponentially. Another iconic acquisition was See's Candies in 1972. While not a high-tech company, Buffett saw its powerful brand, pricing power, and loyal customer base. See's provided consistent cash flow that could be reinvested into other ventures. This investment exemplified his shift from cigar but investing to buying wonderful businesses at fair prices. It reveals that true value often lies beyond the obvious, in understanding consumer behavior and the strength of a beloved brand, proving that timeless principles apply across diverse industries for those with keen insight. Perhaps no investment embodies Buffett's philosophy more than Coca-Cola. Berkshire Hathaway made a massive investment in the late 1980s, recognizing the enduring global power of its brand, its simple product, and its widespread distribution. Buffett saw a company that transcended economic cycles, whose product was a daily ritual for billions. This long-term conviction in a quality company with a sustainable competitive advantage has yielded incredible returns. It illustrates that sometimes, the greatest opportunities lie in plain sight, if we have the discipline to understand their intrinsic value and hold on for decades. A cornerstone of Buffett's investment philosophy is the circle of competence, investing only in businesses one truly understands. He famously avoids ventures outside his area of expertise, even if they seem exciting or popular. This disciplined approach minimizes risk and maximizes the chances of making sound judgments. It's a powerful lesson in self-awareness and focus, reminding us that success often comes not from chasing every trend, but from deeply mastering a particular domain and confidently acting within its boundaries, building strength through focused knowledge. Buffett frequently emphasizes that patience is the investor's greatest ally, allowing the miracle of compounding to work its magic. He holds on to great businesses for decades, letting time multiply his returns. "Someone's sitting in the shade today because someone planted a tree a long time ago," he famously said. This profound understanding of exponential growth is crucial. It teaches us that significant wealth isn't built overnight, but through consistent, disciplined investment over extended periods, trusting in the power of time to transform modest beginnings into extraordinary outcomes. Despite his monumental wealth, Warren Buffett is renowned for his remarkably simple lifestyle. He still lives in the same modest Omaha home he purchased in 1958 for $31,500 and famously drives a modest car. His life choices stand in stark contrast to the extravagance often associated with billionaires, reflecting a deep-seated humility and focus on intrinsic value over superficial display. This commitment to frugality, even amidst abundance, reveals a profound understanding that true richness comes not from what you spend, but from how you live and what you value, guiding his immense generosity. In 2006, Warren Buffett made one of the most significant philanthropic pledges in history, to donate 99% of his wealth to charity, primarily through the Bill and Melinda Gates Foundation and family foundations. This extraordinary commitment, currently valued in the tens of billions, is not merely a transfer of wealth but a powerful statement about responsibility and giving back. His dedication to using his fortune to address global challenges exemplifies how immense success can translate into immense impact, inspiring others to consider how their own achievements can benefit the broader world. Beyond his financial prowess, Warren Buffett built a legacy founded on integrity and trust. His famous quote, "It takes 20 years to build a reputation and 5 minutes to ruin it," underscores his commitment to ethical dealings and transparent communication. This reputation for honesty and reliability has attracted top talent and fostered enduring partnerships. His life demonstrates that sustainable success is inextricably linked to one's character, proving that adhering to strong moral principles not only builds trust but also lays the foundation for unparalleled achievement and lasting influence. Warren Buffett's journey, from a young boy selling gum to the world's most revered investor, offers timeless lessons applicable far beyond the stock market. His story teaches us the profound value of starting early, learning from mentors, embracing patience, understanding intrinsic value, and acting with unwavering discipline. It's a powerful reminder that significant achievements begin with small, consistent steps, fueled by an insatiable curiosity and a commitment to continuous learning. His life is a blueprint for cultivating not just financial wealth, but a rich life built on purpose and principle, inspiring us all to embark on our own journeys of growth. The story of Warren Buffett isn't just about billions, it's about the relentless pursuit of knowledge, the courage to be unconventional, and the belief in the long-term power of quality. His transformation from a curious child with $100 into a global financial titan serves as a powerful beacon of what's possible when vision meets perseverance. As you reflect on his journey, consider the seeds of potential within you. What small steps can you take today, with discipline and patience, to cultivate your own future success and leave a lasting, positive mark on the world? Your extraordinary journey awaits.